is Lisette Cipriano. You might have heard my name in some of the materials. I helped organize the Asia Finance Forum. Thank you for coming here today. I would like to introduce an amazing person who is a mobile money practitioner. I met him in my previous stint before ADB. He is the head of program for mobile money. His name is Ruan Sernapel. Did I say that right? He's from South Africa, and he has a wealth of experience, on-the-ground experience in implementing mobile money in East Africa as well as Asia. So without further ado, feel free to ask questions. It's going to be an interactive session. Without further ado, I hand it off to Ruan.
Thank you so much. Great, thank you so much. Lisette, thank you very much for the opportunity to be here today and to share with you some of my experiences in mobile money. As Lisette said, I'd like to make it as interactive as possible throughout the day, so please feel free at any time to raise your hand or just throw questions at me. I prefer to work in that way, so if there's any questions, don't hesitate. So I wanted to just start off briefly just to kind of mention what the GSMA is, or who the GSMA is as an organization. The GSMA is the association or trade association for mobile operators. We represent around 750 mobile operators globally and have been around for 30 years or so. A lot of what we do is advocacy and policy work for the mobile industry. We also host a number of events globally. Some of you might be familiar with the Mobile World Congress in Barcelona, and we also do events in Shanghai, China, and in the Americas. So that's just a little bit about GSMA. One of the key things of what the GSMA realized is, apart from mobile telephony, we're also key in enabling and transforming lives through digital technology. So today, around 5 billion people are connected through mobile, and 3.8 billion of those people are in low and middle income countries. So this just shows the power that mobile has to connect people, but also get people and transform their lives that are living in countries that are not as developed as, for example, the Philippines or other developing countries in Europe and in the US. So the importance of mobile is critical. Because of that, the GSMA launched a foundation, which is part of the work that we and the mobile money team says is called Mobile for Development. And our focus there is really to see how mobile can help drive social impact. And today we've already changed the lives of 58 million people across the globe. And one of our key targets is to focus on the Sustainable Development Goals and the SDGs. And that's a big part of what we do within the GSMA in the Mobile for Development program. So that's just a quick overview of the GSMA and a little bit about the Mobile for Development. So now focusing on mobile money. So Lisette asked me to speak a little bit about the basics of mobile money and the 101 of mobile money and the industry. So this is really why I'd love to get questions and for you to ask me a little bit about how it works, because I don't always, having been working in the industry, kind of what people know and what people don't know about the industry. So if something doesn't make sense, please ask me and I'll try and explain it. So I start with a really intricate graph because it always confuses everyone. So what do we have here? It's supposed to flow, but unfortunately it's a PDF now, so it's not really going to pop up one by one. So I'm going to have to take you through it. I think at the core and at the heart of mobile money, and one of the most important factors of mobile money is the fact that it's a pre-funded model. And that whatever value, and this represents the ecosystem of mobile money today, right? So if you look at all of these lines and all of these little pretty pictures, it basically is a representation of a mobile money platform and the flow of value within that. And that flow of value is represented in a commercial bank. So whatever money is flowing around in e-money actually sits within a commercial bank. So there's very little risk to the consumer of losing their money, right? I think that was at the heart of when these services launched in the early days in Kenya and in Tanzania and East Africa, was that we have to secure the customer's funds, right? And we can't, it's not the same as a bank where we can hold the deposits and lend the deposits on. This money had to be secured in a trust fund when we issue the e-money. So if there's $100,000 in e-money, there's $100,000 sitting in a bank in a trust account. Can't change, right? So it's one-to-one, and that's one of the daily checks that any mobile money provider does is to make sure that the value in e-money and the money in the trust accounts match. Right? So that's the basics. So where do we start? So we start with the blue, which is the customer's wallet. This blue section here. Right? And then day one when we launched the services, the basic functionality is a store of value. It's not a savings account because we don't pay interest. We just have a digital store of value. And why this is important is because this is the basis of how the customer can then start sending and receiving money once they have a digital wallet. What's important here is, and why this is also different to a bank account, is that it's typically a low KYC, right? Which means that it doesn't have the same requirements that you have to open a bank account. Which means that also the wallet limits on these accounts are typically much lower than you would have if you were opening a bank account. So it's restricted. In most markets, we're talking between $1,000 and $5,000 on average that you can store as a store of value on these accounts. At the same time, they have restrictions on velocity. So how much money you can cash in and cash out in a day, and how much you can transfer in a day. So all of those transactions are limited, and typically those are through the regulations that are implemented around mobile money, is how much money can circulate in those wallets. So that's the first step, is this wallet, right? And then you have at the top here what we call the agent. So I'd say all of this at the top here is a representation of a closed loop system, where the transactions are happening on the same mobile money provider's ecosystem, or within the platform. So you have an agent, and the agent can perform cashing to the customer's wallet, and the customer can perform a cash out. As I mentioned, at this stage, no money leaves the ecosystem. There's no trust account going down during a cash. It's just the e-value flowing from the agent's wallet to the customer's wallet in exchange for physical cash, and the reverse or exchange of a cash out, where the customer would get the physical cash and exchange his digital currency or e-money for the physical cash, right? So that's what happens at the top layer. Then we also have the peer-to-peer, which is effectively a send wallet money between two customers of the same network. So this is, I'd say, the basics of mobile money, and really the core part of this is trust. A lot of these services, when they launch in the beginning, it is about trust in the system. When we look at, for example, in a market like Tanzania, when I started there in 2008, the only way you could send money across the country was through the bus. So there was limited banking. Around less than 5% of the population was banked or had formal bank accounts. So, for example, end of the month, we used to pay our sales teams. I was working in a mobile operator, that's it, with one of the mobile operators, and this is just before mobile money launch. Every month we would go and pay those salespeople. We'd have to go to the bus stop with a big bunch of wad of money and a piece of paper with a list of names and locations, and we'd go to the bus stop, and there'd be an agent at the bus stand. We'd give him the list of names and locations and the money. And they would put it on the bus, and about 2 or 3 days later, the sales team can go to the bus stand in the region where they are and collect those funds. And that was basically the only way we could get money to our sales team. It cost about 10% of the value that we were remitting. That was the cost of that transaction. Obviously, it was took a long time, so it was not very convenient, between 2 and 3 days, depending on how far that person was. And at the same time, if the bus happened to crash on the way or was in an accident, the money would get lost. So there was that risk as well. And this happened quite frequently in Tanzania because the roads are not that safe. So it's really difficult. Now, I'm just sharing this story because I also want to jump forward on when I left Tanzania, what it looked like in 2017, 9 years later. So at that point in time, you could basically do anything that you wanted on a mobile wallet. You could receive money, send money instantly. You could cash in and cash out at over 50,000 agents throughout the country. So there was all of these small agents, the agents that I'm talking about here, that you could go and cash in and cash out. At that stage, the banks had around, on average, 300 branches countrywide, compared to mobile operators that had over 50,000 cash in and cash out points throughout the country. You could send and receive money. You could also send and receive money from overseas. There were cross-border remittances. You could get funds through Western Union, MoneyGram, and a number of other mobile transfer operators receive money into the country. You could pay bills. You could pay your electricity. You could pay your water. This was all instantaneous. You would get a receipt the moment that you transferred that money or paid that bill. You could buy airtime, which was great for the mobile operator. But a number of these services, we were over 100 bill pay companies that said you could pay. So coming from 2008, where I had to send money physically through cash through a bus, to where I could do all of these digital transactions, pay my school fees, all of these things digitally, and in real time. And that was the power of mobile money and the power of what it enabled people to do in rural communities. We moved from, like I said, 5% formerly banked to around 60% of the population in 2017 that had traditional and non-traditional access to financial services, which included mobile money. Majority of that was through mobile money. I think banking penetration was around 15% at that stage. The rest of it was through mobile money. And that was through the three major operators that was in the country providing the services. So going back to the graph just to explain a little bit more here. So we spoke about P2P, we spoke about bill payments, and this is where I spoke about paying electricity, school fees, and all of these services. And these effectively are collection accounts. So at this point in time, that value flows to electricity company. They would have a collection account on the mobile operator's wallet. And every time a customer pays for electricity, or if it's a water utility, it would collect into these accounts. And on a weekly or monthly basis, that we would settle that money to the service provider or the bill pay company. Right? So, and that's when value would actually leave the platform. So we would delete the money on the platform and then settle from our trust account to the electricity company's bank account. So that's kind of the core principles around mobile money. Yeah. Merchant payments, I'm showing it here as part of the closed loop system, but effectively, merchant payments is still something that is relatively underdeveloped in a lot of the markets today, and still a huge opportunity to grow in future. Moving down to the bottom part here. So once we started the expanded transactional ecosystem, the next one was interoperability. And this is where we talked about opening up the platform. So a lot of what I spoke about now was on the same platform, money flowing around within the same ecosystem. The next step was to get it to flow seamlessly across platforms. And this is where we spoke about banking integration, as well as cross-settle interoperable transactions between different platforms. And in 2015, Tanzania was actually one of the first markets to allow for cross-platform transfers between mobile operators. And it was done at a basically a bilateral arrangement. So there was no switch that was implemented within Tanzania at that stage. It was purely through bilateral arrangements between mobile operators that agreed on how to settle between each other. And at the same time, most of the banks were integrated, also in bilateral way. And again, the importance here is that this is all done pre-funded. So the only way you can have real-time transactions is that you have to fund the value that is going to move to the wallet of the customer here. So to give you an example, if I were to transfer money from my bank account to a mobile wallet, the bank that wants to transfer the value would have an account with the mobile operator that they would pre-fund, they would put money in there. So a good example would be one of the major banks in Tanzania would put $1 million towards the end of the month when there's a lot of salaries being paid. They would fund a wallet on the mobile operator's platform of around $1 million, and then that money would be dispersed to the wallets of the customers on the platform. And at the same time, they would have a collection account within the bank, collecting all of those payments, and then they would settle it on a daily or every 2 days. They would settle that amount. So that's how the value flowed in real time between the parties. The next step was to expand the ecosystem. So once we had this interoperability between banks and also other mobile operators, is to look at borrow and insurance. And this is when we talked about offering more formal financial services. We've seen a lot of digital credit. We've seen a lot of the introduction of microcredit products and microinsurance products in these markets. So that's typically when you see operators achieving some form of scale. So I'd say this is kind of the basic model today that we see within mobile money on how these the value flows between the different use cases on a mobile platform or mobile money platform. So any questions? I think a lot of people joined since my opening remark, and for those that joined later, at any point in time, if you have questions, please raise your hands if I'm losing. Yes. Yeah. Sure. No.
So as for the regular wallets,
Yeah.
the Europe regulation, let's say, you should have that amount of money in the bank account and you can't touch it since you issued electronic money, right?
Yeah.
So in the mobile wallet, mobile operators can use the money collected from the customers, right?
No.
So
We cannot monetize the deposits. No. So those deposits with the same with the commercial bank.
no, I mean in the mobile, when they collect money, so they're not using it as a wallet, they can use it, right? Or they should keep it until the customer uses their mobile services. I'm not talking about the wallet, the regular mobile operator, not acting as the wallet. So imagine, you put, yeah, but you can use it. You don't have to keep it over there as a mobile wallet.
Yeah.
Yeah. So you can use that money if you are not the mobile wallet.
If you're not a mobile.
Yeah. Let's
So-
say
yeah.
T-Mobile, right?
Yeah.
He's not the I'm just giving a
Yeah.
sample.
Yeah.
So he collected $100 from you. Yeah. He doesn't have an obligation to keep that $100 always in his account. He can use it for the different purposes, but he will give instead of the service for the $100. Yeah.
Yeah.
But even before you use that services, he spent that $100 or half of it, whatever is it. But in the electronic money cases, if you get $100 from the customer, you can't use that $100 while you issued electronic money, which is equal to $100.
Yeah.
So now we just combine these two, mobile wallet and electronic money.
Yeah.
So I paid $100. I'm using as a wallet,
Yeah.
but my mobile operator already used half of that amount, and they don't have it in their account. So what if I come to the mobile wallet and say, okay, I'm spending that amount of money, or I want this amount of money back, it would be a problem?
I'm not sure I follow the point. Are you talking about the prepaid, like the A-time value?
Yeah, that's
Okay.
the prepaid.
Yeah. So the A-time value is separate. It's two separate wallets. It's never combined.
Oh, no, so your mobile wallet account is different than your mobile.
For the phone calls and data, separate.
So you should tell in advance that. So I got, let's say, 100 mile in my balance. Yeah.
Yeah.
So half of it for the mobile wallet. You should tell in advance.
Because the services are completely separate. So when a customer does a cashing at an agent, it goes to this wallet. From there, he can then top up and buy airtime with that value, and then it's the same as a bill payment. It would effectively sit here. So the company like T-Mobile or Vodafone would effectively be a bill payment on that service. So that would just be the same as any other business that collect payments for that airtime, and give an exchange. They give them airtime value, but it would be two separate accounts. And the airtime purchase cannot be converted back to cash. So it's basically a sale. It's goods and services. So after that, it leaves the customer's wallet here and collects into this collection wallet here. So the value would still be sitting in the trust account until the money settled to T-Mobile through the banking system. So all of the airtime that was purchased now needs to be paid to T-Mobile for the services. Then the value would leave the trust account and be settled to T-Mobile's bank account for their services, for airtime. So at that point in time, the value goes to the service or the bill pay company or T-Mobile business. But those two wallets are separate because e-money and airtime are not the same thing. It is not treated in the same way. E-money is actually like electronic cash. There's no difference in the way that it's serviced.
Okay. Now let's continue with that. Maybe I'll understand
Yeah.
better.
So when I refer to a mobile wallet, it's purely e-money. It is not airtime wallets. It's not an airtime wallet. Yeah. Yeah. But airtime wallet is not reflected in a trust account. It's in this ecosystem, you would not see the airtime. This is purely e-money. It is that you do not see the airtime. The airtime is a product or a service from the mobile operator that is completely separated from this. Yeah. Yeah. Yes.
Tell an investor, this is my airtime money,
Yes.
and this is my mobile
Yes.
money.
So typically in the markets where you have mobile money, this service or the product is branded separately. So in the case of like Safaricom, the airtime would be Safaricom, and then M-Pesa would be the mobile wallet, which would have the e-money. So the products are branded separately, and there's two different ways to check your balance. You can check your airtime balance, you would dial a code and see your airtime balance, and you would dial another code to see your account balance or wallet
I
balance.
understand. So
Yeah.
your airtime, not your usable money. Airtime is just your airtime. But
Yes.
can you transfer that airtime money somehow to your mobile wallet?
From airtime, you cannot go to cash, but from your e-money, you can buy airtime. So you can go that way, but you can't go back.
Okay,
Yeah?
nice.
We don't want to give you money back. Yeah? Any more questions on that one? I think we managed to solve that one. So happy to take more. No? Yes, one more question. Otherwise, you have to listen to me for an hour and a half. So better we have the question.
Thank you. So my question is regarding the e-money and the top up. So where did the e-money come from? Did it come from the top or it's different from
The
the top
e-money, where did it come from?
up? Yes.
Okay, so that's a very good question, because typically when you start on day one, the service, you have to start with a pre-fund. And typically the mobile operator would pre-fund these guys at the top, the agents. Because for the first cashing to happen, for the customer to go and say, I want to have e-money, there needs to be some money he can get from the agent. So for that first cashing to happen to the wallet, there needs to be money pre-funded with the agent. So the first transaction, actually the mobile operator on day one would put money into the system, and then once it starts, the agent would invest his own money. So thereafter, and I'd say a nice kind of analogy of what it is, it's like an Uber for banking, right? So these agents in commission, they don't belong, in most cases they don't belong to the mobile operator. The operator has a contract with the agent, but they're private businesses, right? They're small shops or businesses that sell goods and services, Unilever, all of these other FMCG products. So, but they have a contract and they're in commissions for digitizing cash. So going from cash to digital, that's how they make money, and commissions. But it's effectively, but they can stop at any time if they don't want to do the business anymore, they can stop. But there's an onboarding process typically of agents, which we call KYA or Know Your Agent, similar to KYC, where we get the business license, we do some training like AML training, we train them how to register customers and do KYC checks, we give them basic products and services training, financial literacy training. So that we do with the agent when we onboard them, and they have certain service levels agreements with the operator, but they operate their own private business, right? So this is in most cases how the agent networks are established, and probably today still one of the core parts of mobile money is this ability of mobile operators to build up this distribution and agent networks. And they're really the ones that keep on, as the demand for e-money increases, keep investing and putting money in the trust account to get more e-money. So they keep on buying the e-money from the mobile operator and then feed the customers and the use cases with that e-money. Yeah? Any other questions? Right at the back. Oh, there's another question here.
I'm actually just more interested to understand the characteristics of an agent. So are they dedicated to one MNO or they're working with multiple MNO? And their revenue model is it variable? Are they only earning from the transactions? And just dovetailing into that is that I find a lot of the market actually getting flooded with new mobile wallets offering better discounts, better cashbacks. So how would like a mobile wallet ensure stickiness?
Okay, those are a couple of really good questions then. So, different countries have different models around agent networks and exclusivity. So, I'd say best practice that we would recommend is not to be exclusive at an agent level. However, and a shop or an agent could offer the services of any mobile provider. I think that would for us be kind of best practice in the agent network. Fee structures, typically agents earn commissions based on cash out and cash in transactions. Those would be the two core streams. It varies from market to market on the types of pricing that's in market. Typically, the most common one is a tiered pricing, depending on low to high value transactions. It will be broken up into percentages of the transaction value for both cash in and cash out. Some markets prefer to charge a flat fee, depending on, I'd say, the level of literacy and how used markets are to tiered pricing models. In some markets, they find it too difficult for customers to understand different tiered pricing, so they opt to go for like a single flat fee. My personal preference, and I'd say best practice, is